Welcome back to The Explainer. So, last time we left off, Alex had just turned this simple baking hobby into a totally booming business, Alex's Cookie Kingdom. But you know the thing about success? It brings a whole lot of chaos with it. Suddenly, Alex isn't just, baking a dozen cookies for friends. We're talking suppliers dropping off literal mountains of sugar, customers lined up around the block, and cash just flying in and out of the register every single minute. It's a great problem to have, sure, but it's a massive problem nonetheless. How do you keep the whole shebang from falling apart? I mean, really think about it. If you're selling 1,000 cookies a day, how in the world do you track it all? Alex is just completely overwhelmed by the sheer volume of daily transactions. And remember, a transaction is just an exchange. Buying a 50-pound bag of flour, that's a transaction. Paying the delivery driver, transaction. Handing over a box of warm chocolate chip cookies to a paying customer, yep, transaction. When these are happening hundreds of times a day, trying to just keep them all in your head, yeah, that's a guaranteed recipe for disaster.
To fix this, we've got to shift our mindset. We need to think like financial detectives. Because in the world of business, every single transaction is essentially a clue waiting to be solved. Every time cash changes hands or flour gets delivered, it leaves a trail. And if we can capture these clues, they're going to tell us the true story of whether Alex's Cookie Kingdom is actually making a profit or, quietly losing money behind the scenes.
Okay, let's dive into this. To solve the mystery of our daily business, we're going to follow a very specific set of steps. This is the very beginning of what we call the accounting cycle. First up, we find the clue, the transaction itself. Second, we record it immediately in a special daily diary so we don't forget it. And third, we move that clue over to a master book where all our info is neatly sorted out. So let's take a look at that first tool, the diary. Section 1, the secret diary, also known as the general journal. Now, every great detective needs a notepad, right? And for Alex, that notepad is the absolute first tool for conquering all this business chaos. Our source material formally defines a journal as any book containing original entries of daily financial transactions. The key word here is absolutely daily. The second a customer buys a cookie or Alex pays for sugar, boom, it gets written down right here, chronologically. It's the very first place a financial clue ever gets recorded.
And every single time Alex jots out one of these individual clues in the diary, it's known as a single journal entry. If Alex has 50 transactions in a day, you guessed it, there will be 50 separate journal entries logged, one right after the other. But here's the catch. You can't just write, bought some flour, and call it a day. Detectives need a highly organized special language to write these entries so anyone else can understand them later.
Section 2, decoding a journal entry. So to decode how an entry is actually written, we rely on this brilliant balancing concept that's literally been used for hundreds of years. It's called double entry bookkeeping. The rule is simple, but it is super powerful. It's defined as a method of recording financial transactions in which each transaction is entered in two or more accounts and involves two-way, self-balancing posting. Put simply, in the Cookie Kingdom, every action has an equal reaction. If Alex hands over a cookie, Alex gets cash in return. Two things always happen. And because of this, your total debits must always equal your total credits. Now, what's really interesting here is how visually simple this golden rule is. A debit is always, and I mean always, an entry on the left side of our journal. A credit is always an entry on the right side. That is it. Left side, right side. When we write out our journal entry, the dollar amount we drop on the left side absolutely must perfectly match the dollar amount we put on the right side. Let's actually see exactly how Alex does this in the diary. Check out this real journal entry from the Cookie Kingdom. On May 30th, Alex sells a box of cookies for $10. We've got our two parts. First, the business gets cash. Cash is an asset, and when we get more of it, we put it on the left side, so a debit of $10. But why did we get that cash? Well, because of cookie sales. So right on the next line, we record cookie sales on the right side, a credit of $10. Look at those columns. Left side $10, right side $10. Our clue is officially locked into the general journal, and our books perfectly balance, nice and neat.
Section 3, the master book, the general ledger.
Let's move on and see how this builds, because if you only use a chronological diary, you're eventually going to hit a massive problem. Imagine trying to flip through hundreds of pages of daily entries just to figure out how much total cash you have. To fix this, Alex needs the ultimate master book, which is formally called the general ledger. Our sources define it as a collection of all asset, liability, owner's equity, revenue, and expense accounts. Basically, Think of the ledger as a giant filing cabinet where we sort all those daily clues. We pull them out of our daily diary, the journal, and we file them into specific folders in the ledger. That way, Alex can finally zoom out and see the big picture. And this brilliantly illustrates exactly what those folders look like inside the general ledger. Literally, everything in Alex's business falls into one of these 5 categories. You've got assets, which are things the business owns, like cash; liabilities, which are amounts owed to creditors, like bank loans; equity, which is the residual interest, or basically Alex's actual value in the business; revenues, like our cookie sales; and finally, expenses, which are the costs of just running the business, like buying flour and sugar. By moving our journal entries into these specific ledger accounts, everything goes from chaos to perfectly organized. So here's the absolute crucial takeaway. If you don't track the clues, the kingdom crumbles. Taking the time to write these journal entries and physically move them into the general ledger, it is not just busy work. It is the literal lifeblood of the business. It is the only way Alex can open up that cash folder in the ledger and know for sure if there's enough money to actually pay rent at the end of the month. Without these 2 tools, a business is pretty much flying completely blind.
Section 4. Organizing the kingdom.
By mastering these tools, that daily chaos of 1,000 cookies being baked, bought, and sold has been completely tamed into these neat, balancing callings of debits and credits. And what we're really uncovering here are the crucial first steps of a much broader process. Our source material defines the accounting cycle as the sequence of steps followed in the accounting process to measure business transactions and transform the measurements into financial statements for a specific period. So far, we've really just covered the measuring part, right? Finding the transactions, putting them in the journal, and sorting them into the ledger.
But, the journey definitely doesn't end there. Now that you know how to track the clues and organize all that data, what do you actually do with those folders? How will you measure your own success and prove to the world that your kingdom is actually profitable? Well, that requires transforming our master book into actual financial statements. And that is exactly what we're going to uncover next time. So keep exploring, keep questioning, and I'll see you in the next explainer.